More trouble for Tata Motors. Jaguar Land Rover CEO Thierry Bolloré resigns amid a period of financial weakness for the company and a lowered guidance for FY23. The stock is the top loser on the Nifty today.
Big block deal seen in Paytm, with SoftBank likely to have sold 4.5% stake at an average price of 561 rupees per share. This after the pre-IPO investor lock-in ended.
Suven Life Sciences announces randomization of the first patient in trials for a dementia drug. Stock surges over 10%.
Blackstone commits to buying majority stake in R Systems for over 2,900 crores. The PE firm will also launch a conditional delisting offer priced around 246 rupees a share.
Nykaa, among all the other new age companies, continues to decline after its bonus shares have been credited. The stock has now fallen almost 16% for this week.
Hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangala Malu. Well, let's get a quick check on the markets. We've moved into the green briefly. Good time to get in Sachit Anand Utekar, who joins us on the show. Hi, Sachi. Buy the dips worked. You went into the green, but we've come off a little bit as well. I think the uptrend is intact, but how do you trade from here on?
Good morning, Nigel. Clearly, if you look at the indices, I think if you look at today's trading session itself, it is well concealed within yesterday's trading range. So when it comes to Nifty, we are seeing signs of an inside bar kind of formation again. I think the momentum or the movement will only unfold once we see a decisive breakout above the 18,450-55 mark. And on the lower side, there could be weakness only below 18,350. So I think net the Nifty could just be oscillating throughout the day within this particular narrow range. Very similar structure when it comes to Bank Nifty as well. The bounds are clearly defined here. 42,600 could be a breakout zone. After that, we may see some unwinding pressure. But on the lower side, I think 42,300 looks like a decent support. So probably even here, the expiry could be somewhere close to 42,300 to 600 within this particular range. So I think when we look at indices, there may not be a clear-cut, decisive, immediate trade. But I think it's better to be a level-based trader. And once we see one of these browns getting breached, probably we can chase momentum.
Makes sense. In that case, would you be with the stocks instead? And what stocks would you have, if any?
Good morning, Mangalam. Mangalam, I think clearly there are stock-specific opportunities which are going on for the last 3 to 4 trading sessions. We continue to keep a long-short equation. I think if you look at the Nifty daily chart, we are seeing a broadening formation, which is not a healthy sign. So unless we don't see a closing established above the 18,500 mark, it's better to have a long short equation. And here what we are recommending here is I think there are some signs of distribution which were evident in Adani Enterprises yesterday. So probably some short positions can be created here. The stop loss for the trade should be placed at around 39.75. We are looking at a level close to around 3800 to be witnessed soon. And on the positive side, Dalmia Bharat has been doing phenomenally well. It has already elevated its base towards 1700 levels. So right now, the momentum looks stronger. 1800 is the target that we are looking at from a couple of days perspective. The stop loss should be placed at 1695, and we are recommending, building longs in Dalmia Bharat.
All right, take that point, Sachi. Thanks a lot for joining in and giving us your views on individual stocks and the markets. Believes that currently it is range bound, so important to trade at the extremes of those ranges that he's speaking about. With that, we talk about a few ideas that we get from our team at Money Control Pro. Khushbu Gupta joins in.
Home First is a technology-driven housing finance company that operates in the affordable segment, targeting first-time home buyers. Home First has grown its book at a healthy pace in the last 3 years, successfully weathering the COVID wave. The portfolio mix is favorable, and the company also enjoys a well-balanced customer mix. The asset quality is improving with continuous decline in credit cost. We believe that Home First could achieve new heights on account of the multi-year growth opportunity in the affordable housing space. The consistent performance presents a strong case for re-rating of valuation multiples. At the current market price, Home First is trading at 2.9 times FY24 book value. The current multiple is lower than its historical valuation, which has been in the range of 4.5 to 5 times book value. The valuation appears attractive, backed by a consistent strong growth and asset quality. Also, strong earning visibility and superior returns reinforce our conviction in the stock.
For that, Khushbu. Well, on that note, though, we'll have to slip into a short break. You come back and we'll get chatting with the management of Mayur Uniquoters. They'll be joining in to detail the past quarter and the way.
Welcome back. Let's talk about Mayur Uniquoters. They reported their second quarter numbers. The margins were a bit of a disappointment. We did see a decline on that front. So let's get chatting on the way forward, because now, as we see, the raw material prices have declined and things are perhaps, picking as far as demand is concerned. We have with us Mr. Suresh Kumar Podar, who's the CMD and CEO of the company. Thanks a lot, Mr. Podar, for joining in. The first quarter, you did volumes of around 70 lakh meters. You said that second quarter would be similar. Can you give us a sense of what were the volumes and what you can do for the entire year?
You see, volume was, in this quarter, it was 75 lakh meter, and average price was 270 rupees per meter.
Okay. All right.
And the full year, sir?
Full year, this year should be better than last year. Last year was better than previous last year. And this year, I expect about 15%, 12 to 15% growth.
All right. That's going to be a tall ask, right, Mr. Podar? Because in the past quarter, there was a degrowth on volumes, right? There was a mild degrowth. But you believe second half of the year will be much better. So for the year, you're maintaining your volume target of 12 to 15%. Are we getting that correct?
Yes.
Okay, got that. Sir, the concern is not on the top line, actually. The concern is on the margins. There must input costs have spiked up, the various other issues that you faced in the past quarter. And in the last few years, your margins have moved from the mid-20s to the past quarter, it was in the high teens. What kind of a margin guidance can you give us for the second half of this year?
You see, this year, we have a PAT margin of 13% in this quarter and 14% in previous quarter.
Okay.
And I think in this year, it will go like this only.
No, Mr. Podar, actually, we look at the operating margins, the EBITDA margin, that is, which was around 17%. So if you could tell us...
No, 1 minute. EBITDA this quarter is 20% and last quarter was also 20%.
You're pulling in the other income, I think, sir. So do you believe that the margin will improve from here? If yes, by how many percentage points? 100 basis points, 200 basis points? Will it improve, or do you expect the margins to stay at these levels?
There will be improved because in these 2 quarters, the export OEM, automotive sale was down a little bit because of the chips problem having all around. And we have a good price realization in export automotive OEM, and the profit of margin is also good. Unfortunately, because of this, the sales volume has gone down. Now it has started picking up, and in 23, 24 and 24, 25, it will pick up very good, because the kind of orders which we have got in our hand, 23, 24, 24, 25, the volume will also increase, the top line will also increase.
But what kind of a, Mr. Podar, sorry to come in here, sir, but what kind of a margin improvement are you looking at from here? You said, as per your calculation, it was 20% for the past quarter. So can it improve to 22, 23%, given the kind of orders, given the kind of realizations, given the kind of measures that you have taken? What is the improvement?
You see, at present, you can see it's about 14% in this first half.
Right.
And I think that will remain same, maybe 0.5% or 1%, maybe more.
Okay.
And so far as 23, 24 and 24, 25, it can increase by 2% point in 23, 24 and 24, 25. Because I am expecting good business with export auto OEM.
Right. Let's talk about that itself. You said that you have a few orders on hand. The last time you joined us, you said that Mercedes had committed to take 40,000 meters per month, but it was taking only around 15 to 20,000. So just wanted to understand, have they increased their, offtake from you?
No. In first 2 quarters, they have made approximately 30,000.
Okay, 30,000. And what are the other orders that you have in your hand right now? You have one from Volkswagen. BMW will, of course, come in FY24. Tesla was in talks as well. What are the offtakes expected from these OEMs every month?
This coming months.
Yes.
Yeah, coming months it will remain same. But USA sales of FCA, that will increase.
Okay.
Okay, all right. Mr. Podar, also tell us about your PU plant. Now, numerous times the numbers have been all over the place. Last year you did around 27 crores. It's clearly, the big driver going ahead. But you end this year with what kind of a revenue number? There are a couple of brokerages that are indicating that maybe you'll do around close to 50 crores for the year. Do you think that's possible?
You see, whatever we have done in first 6 months in PU, the same will be repeated in next 6 months also.
How much have you done in the first 6 months?
So many times I tell you the main problem is the manipulation in the import and all that duty evasion.
Correct.
By
Mr. Podar, sir, just want to understand this in a better manner. For the first half of the year, what kind of a sales number have you done in the PU unit? So we could, double that and get the number for the year. And also you're saying that this import, goes on worrying you all. There has been a duty that's been levied. What is the price difference between Mayur Unicota's PU, what you're supplying, and the imported stuff? Go ahead, both these two questions.
It is about 30 to 35% difference.
Okay.
And that is also because of the manipulation of import duty. Number two, even up to 10 to 15% difference, we can do fantastic sale. But 35% is very big. So whatever we are selling at the moment, which is related to the export business, those footwear people who are exporting their footwear,
Yes.
they are buying from us. And so far quality is concerned, so far product is concerned, today we are able to make all the possible imports which are happening in India. We are able to make better material than that. The only problem is this. And we have tried to put this anti-dumping duty 46 cents. Now people are manipulating in quantity also.
Okay.
I don't know how the India is going to improve. We are talking about manufacturing.
No, we take your
But
point,
until
sir. We
unless
take your
this-
point, sir, and we will, by you airing your opinion here, perhaps someone is listening and maybe try to fix that as well. From your business standpoint, I wanted to understand about a third of your revenues coming from footwear as well. And so far from the numbers that have come in from all the footwear players, they've spoken about weakness in demand. Will that have an impact on your business as well this year?
Yes. You see, previously, 2-3 years back, we were doing 60 to 65% footwear. Now it's reverse. Now automotive is 60 to 65% and footwear is going down. And this year also in the season, it was not that good which used to have it. I don't know.
Right. And
Why this is everywhere it is down.
Sure.
All over India it is down.
the other thing that I wanted to know from you, sir, was that you had said that 15 to 20% volume growth is what you said you would do earlier. Now you scaled that down to 12 to 15% volume growth. And because of lower prices, you said revenue growth would be 10 to 12%. How much would revenue growth this year be now, according to you, with 12 to 15% volume growth?
No, volume growth may be less.
Okay.
But the top line growth will be more and bottom line growth will be also more because of our export to automotive industry OEMs, and where the sale price is high, where the profitability is high. So volume growth will not be, may not be 15% or something,
Right.
but sales growth will be there.
Okay. All right. Very quickly, Mr. Podar, before we let you go, PU plant, last time you were talking about around 45 crores of revenues for the year. In the first half, how much you have done?
We have done about 14 crores.
14 crores. So for the year, then you'll do around 28 crores?
So it should be more, about 30 crores.
Around 30 crores for the year is what you're telling us. So
And
yes,
if we solve this problem, immediately...
we get that. We get that. Also, very quickly, sir, there was a question mark from the street on the succession plan. You had said that, your son has come back to work. Any update on that front? Is your son still in the business? Is he on a day-to-day basis involved in the company?
Yeah, he has started.
Okay. All right. Thanks so much for clarifying that, Mr. Podar. We appreciate your views. It's been a tough past quarter or so, but you're expecting a bit of a recovery, and we wish you well on that front. Look forward to chatting up with you rather soon.
Thank you.
For the time being, though, we'll slip into a short break, come back, continue our focus on markets and on stock-specific action. Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, Tata Motors, that's the top loser on the Nifty after the JLR CEO resigned. Sonia joins us to tell us more on that front. Sonia?
Well, thanks a lot for that. As you rightly pointed out, this is a tough time for Tata Motors. Now, the JLR CEO has resigned from December end of this year. Thierry Bolloré, who was the CEO from 2020, has now put in his resignation, citing personal reasons. Adrian Mardell will be taking over as the interim CEO of JLR. Now, this comes at a time when there are a lot of challenges that JLR is facing, given the kind of demand crunch in the European region. In Q2, JLR, in fact, lowered its guidance for FY23. They also reported a negative free cash flow of £15 million because of the adverse working capital movement. The EBIT margins for JLR had fallen 230 basis points quarter on quarter. And at a time like this, the resignation of the CEO bodes as negative news for the company. There's no clarity on when the new CEO will be announced. And for the interim basis, there is Adrian Mardell. Remember, the stock as well has been a big underperformer this year. It's down 15% this year, while stocks like M&M, TVS Motor, etc. have had huge rallies. So all in all, disappointing information coming in for Tata Motors.
All right, tough times continue for Tata Motors, but can't say the same about Exide Industries. In fact, good times continue for them. Sonia, the excitement, it's up almost, 25% in the last 6 months?
Absolutely. And Exide, after a very long time, came out with a detailed conference call on their lithium-ion manufacturing foray. They're getting into the lithium-ion business in a big way. In fact, phase 1 of their lithium-ion cell plant will start by the second half of FY25. They expect production to stabilize by FY26, and there's a huge capex plan as well. They will require capex of 4,000 crores in the first phase and an incremental spend of 2,000 crores in the second phase. They have reached out to OEMs for their lithium-ion batteries, and the response has been very strong. The lead-acid business margins are also improving. Remember, the stock has rallied about 25% in the last 6 months, and despite that, this news flow has seen a further up move on the stock, hence a positive news flow coming in there.
Okay, all right, Sonia, thanks a lot for that. Well, keep an eye out on Paytm, Bill. That one's moved lower yet again. It's down closer on 10% now. Big selling being seen out there. RVNL, after the kind of run that we've seen, well, that's pulling back a little bit. And Axis Skates, that stock went one way. I think from March onwards, it was up 2.5, 3 times odd. The management sounded very optimistic. But now there are pending orders at lower circuits. So, there's no exit for the last couple of trading sessions out there, Mangla.
Yes, Nigel, but, the frontline consumer stocks are saying it's time for coffee and perhaps get in a little more than coffee as well, maybe a biscuit along with that. We have Tata Consumer and ITC, both of them doing extremely well. On that note, what we'll do is take your leave, get our coffees as well. You stay tuned. Meanwhile, Trading Hour comes up next.